Hello and welcome to my episode today. I'm going to talk about one closed construction loans. I'm going to include all the different types of construction loans that we do. And we have two right now, and essentially almost maybe three. We have the conventional construction loan, the jumbo construction loan, and the VA construction loan. But the document I'm going to go over today to help assist you to educate you on the loan itself and the process so that you can prepare yourself to build your dream home is going to really be generalized in all the construction products that I have. So welcome to my channel. My name is Jed from Best Life Mortgage, and I make these videos to help educate you on the loan process and educate you on loan funding so you can make better financial decisions when it comes to financing your home. And so what we'll do is we're going to jump into this. I'm going to go ahead and minimize this screen here real quick. I'm going to take it over here in the corner, and I'm going to jump into a document that I think is awesome, and I'll walk us through this document. It's going to be up on the screen here now. This is a one closed construction loan. Now, you might hear this term one closed construction or two closed construction. We do the one-time close. The difference between those two products or those two building, programs is on a one-time construction loan, you are going through an underwrite initially when you go through your loan and you set up to get approved. And it's a one-time underwriting and a one-time close. So essentially, just like you would if you were buying any other traditional home, you're closing on your loan within about 30 to 45 days from the time you start. And then the money is secured in an escrow account and delivered to the builder to build your home throughout that 6-12 month period. But there isn't an additional closing at the end where you have to requalify for the loan, get a new credit check, everything like that. Like that's all done at the beginning. So no new income documents at the end, no new credit at the end. You don't need to qualify again at the end. Like it's all done up front. And I think that for me as a loan originator and a mortgage guy, also as an end user, like if I was getting construction loan, that's the way I would want it, because I would want to make sure that I was 100% approved when I started my loan, and I didn't have to get requalified at the end. I mean, you never know what could happen by the end of the loan. Maybe your income's changed a little bit. So it's a whole year. Maybe you took a new position and the income didn't match up. Maybe you're making just as much, but maybe it just doesn't qualify now. So I think this one-time closed construction loan is the way to go, and that's why we've selected it. So I'm going to walk you through the process here of sort of going through the steps of getting yourself ready to get this loan and taking this loan from start to finish. So just a little bit of an overview. Step one is selecting your house, right? So if you're going to buy let's call it like a existing home, you're going to be out there walking homes, selecting homes, making sure you have your right layout, making sure the home is in the good area for you. You need to do the exact same thing when you're going to be building a home. But the cool thing when you build a home is you get to work with your designer or choose your floor plan. You got to choose everything, right? You don't have to choose someone else's past decisions are not your decisions. So you got to make up all your own choices on this. So spend the time necessary to choose the right home for you. Are you going to design your home with an engineer? Are you going to choose a pre-selected design and then maybe make changes? But this is you. You get to design and select your dream home. Also, the area. You get to choose your area. Do you have a property already selected that you own, or are you searching for the area to build your dream home on, and you're going to do that all at once? So those are the things for you that you're going to have to do. Right here it says on the screen, it says build your dream home. When pre-qualifying, find out if they already own the land. That's one thing I would want to know. If they do, encourage them to start vetting builders. Obviously, you're going to want to find a builder. And if you're looking to purchase the land, I'll connect you with the real estate agent so you can find the land, right? So part of my job as a loan officer is help connect you with the right people, build the right team. And part of building a dream home here is the right team. Contractor would be extremely important, necessary. You can't do it without it. And a real estate agent to help you find the proper location and maybe even vet your contractor out. A lot of the realtors know the contractors, they know the builders, they know the good ones, they know the ones we shouldn't be working with. So it's super important. So the next step here is, after you've really probably haven't gone 100% selecting the dream home yet, but you have these pieces in motion, is you do need to choose and select your contractor. The general contractor that you're going to select also needs to be vetted and approved by us as a lender, so that we know you're going to have the right builder that will finish the job and do a good job for you. We vet that out. So part of that I think is really good on your side, because you're not 100% having to just choose that on your own. Now you get to choose it, but you get to have a lender like us who knows the business well. We can vet this contractor out, making sure that they're going to be able to do the job and do it well. And so that's what we're going to do in step 3, is we're going to vet out your contractor and get them approved. There's a series of documents they would need to sign, everything like that. So, and then we need to check background, fill out the forms, everything like that. So we're going to make sure that happens. And by the time they're approved, you can be assured that this is going to work out for you. Okay. After the project actually gets approved by underwriting, we actually, get everything approved. We have a lot of documents. We need to get, building permits, probably plans. We need to get an appraisal done. You might be asking, how do you do an appraisal if the house isn't even built? Well, appraisers are used to this. They're going to appraise your home based off the location that you're putting it, the land value, as well as the actual specs of the home. So they're going to need the plans and everything like that, the quality of construction. They're going to need to work with the builder on and understanding what you're installing, from flooring to appliances to roofing, HVAC systems, everything. They need to really understand the whole deal, and that way they will make sure that your home is appraised properly, because your home will be appraised here right up front with a value, and that will be important to make sure that we justify your loan value and everything like that. Now, at the end of the project, you also are going to get a final appraisal, meaning that we're going to have to prove that the home's actually done, right? And so even though your home loan's closed already, all the funds are secured at closing, which is before building project starts, we still need to prove to the lender that everything has been completed. And one thing that's neat, I guess, about that, just to understand in the step here, is that we're making sure we have all the documents, that the builder gets us all the documents, and you're not really doing that or managing that. We're managing that as a lender. And so you get a rest assured everything's done correctly on that side. All right. The next step here is we go to closing. So you go into closing, typically with an attorney. You're signing all your paperwork just like you would if you're buying a resale house. Typically, that's going to happen 30 to 45 days after we submit for underwriting. And that's all happening before you even start building. We're going to closing, and you do own this home, essentially, even though it's not built yet. But you do own this home from a perspective of you've closed on the loan. It is your loan. And now that money is taken, putting inside a contractor's escrow account. Now, the contractor doesn't get to have all that money. They have to request draws for that money to come to them. And typically 2, 3, or even 4 draws or more during the build process. And so we are managing that build process from a lending perspective. If you see here in number 6, we're managing that process with an oversight company. We use a company called Granite. They're very experienced in the loan process from a construction standpoint. And what they're doing is managing the timelines, the inspections, the title documents, the insurance documents, the lien, the waivers, the licensing. All that is being managed in-house by Granite. We can make sure this process runs smoothly and that your home gets built on a good timeline and on time. We have essentially on most of the loan products 11 months from start to finish to build this home and to get it completely done. So super important that your lender and your contractor are working together on that. Step number 7 is your construction is completed. Typically you'll get a certificate of completion from the county. This is a very important step. At the final step here, you might have final inspections, maybe a final appraisal inspection, stuff like that. We need to have that. Once that is done, we have proof the home's completely done. Then your builder will get his final draw or final pay, and you will have a completed house. You'll be able to move into that house. I'm going to read this last part here in section 8. It said, upon passing final inspection, your borrower, which is you, will sign final loan documents that authorize final construction draws to your contractor. Any residual construction funds will be converted back into the loan for the remainder of your loan term. The loan turns from interest only to standard principal and interest payments. And so during that loan period, that first 11-month period, if it takes 11 months, your loan at the time is interest only on the amount that's been drawn. Okay, that's good to know. It's an interest-only loan on the portion that's been drawn. Up until that time, once you do have 100% completion, the loan converts to a 30-year term principal and interest loan, and now you're paying full term, 30-year fixed payments on a 30-year term. Some things important to note that you may be interested in knowing here is when you close on your loan, your interest rate is fixed. It's locked in. You're not floating during construction, so it's a fixed rate. But if the rates do drop during construction, and you get to the end and rates in the market are lower, you do have the option to float your rate down for a fixed long-term loan at the end. So there's no need to try to refinance this at the end or try to jump from construction to a permanent financing. This is the permanent financing from day one. The only difference is during construction, you have interest only. And then after construction, you have interest in principal. So that's a difference there. So just keep that in mind. You don't have to close again or pay for refinance or anything like that. But if the rates do drop, you do get to drop, those rates down and stuff like that. So that's also good to know. I'm going to take this back over here, blow this up a little bit more. Let's see here. Boom. There you go. I hope that's been helpful for you. As a mortgage broker, one of my jobs is to understand the loan products in great detail so that I can help you navigate the loan process. Obviously, with a construction loan, there's way more details on that. It lasts for 11 months to 12 months sometimes, so it's not such a fast process. We usually take a loan from start to finish roughly in about like 10 to 15 days. This loan would also go fairly quickly. I would say between 25 and 30 days, maybe 40 days, depending on your contractors, working with us and making sure all the documents are done. But I'm also here for you throughout the whole 11 month. I don't manage the process for the whole 11 months. That's managed by a very skilled team in-house on the construction phase. But I am here to support you, not just for 11 months, but for the remainder. Sorry about that. But for the remainder of your and I's working together, which I hope is long term. I hope we're doing multiple loans for many years to come. I can be a financial advisor for you on the lending side. There's a lot of different ways to look at mortgage financing to help you with home purchase, also with investing, and with just growth in general for your finances. So I hope this has been helpful today. I would love to talk to you individually about your construction project. I could help you put the financing together. If you like the content that you see here on my channel, please take a moment, maybe consider giving me a thumbs up and subscribing to my channel. I can make sure to put more of these out for you. But my number is 864-800-9251. You can call or text me anytime with additional questions. Here's to your success. Take care, and I look forward to seeing you on the next one.